And today we are going to learn about candlestick, that is Marubozu. Marubozu is a long-bodied candlestick with no shadows or wicks. So Marubozu is a candlestick that is not having any shadows. And this Marubozu candle can be, it is present in two variants. One is red Marubozu, which is bearish Marubozu, and green Marubozu, which is bullish in nature. So, and in this video we are going to discuss about green Marubozu. So let's see green Marubozu characteristics. So this is a normal candle. So we know that for a green candle, open present at the bottom and top is close, and highest peak point is called high and the lower one is low. Now, according to Marubozu standard definition, Marubozu is a long body candlestick with no shadows. So let's remove a upper wick. So when you remove upper wick, close becomes equal to high. So close is equal. Now remove the lower shadow. So then open is equals to low. So Marubozu candle is a candle whose open is equals to low and close is equal to high. And see, according to standard book definition, close should be equals to high, open should be equals to low. But in reality, it is not possible always. So we will take some minor considerations, minor variations we will take into consideration, that is up to 0.2%. Means if there is a difference between close and high up to 0.2%, then we will consider it as a Marubozu. So how we will calculate these close and high variation? Let's see. So let's take an example, and here a candle whose open is equals to low, but there is a difference between close and high, means you will be having a small wick. So from the graph, let's see, this is the data we are getting. So high is at 1001 and it was closed at 1000, and open is equals to low. Here the percentage difference between high and close is calculated by the given formula, that is high minus close by close into 100. So here by substituting the values, high equal to 1001, close equal to 1000 and close equal to 1000, the answer will be 0.1%. So 0.1% is less than 0.2%, which is the allowed value to consider a Marubozu. So this given candle is considered as Marubozu, and we will place a trade on this one. So this is completely valid. And let's see example 2. And here's a candle with the difference between high and close. So let's see high value at 101 and close at 100, and open is equals to low. So same, we will take the same formula, and after submitting these values, we are getting the percentage is 1%. 1% is very greater than 0.2%. That's why this candlestick is do not considered as a Marubozu. So we will avoid trading this one. So what are the conclusions we have made from this is, let's see 4 different kinds of candlesticks, in which the second one is having a smaller wick, and third one is having a longer wick, upper wick, and fourth one is having a lower wick. So in the first case, open is equals to low and close is equals to high, and this is following the standard definition of a Marubozu. So placing a trade on this Marubozu is valid. And in the second case, low, in the last case, close is equals to high, but the low is different from the open. So when a candle is having lower wick, even though its close is equal to high, we will avoid trading that Marubozu candle. Means we do not consider it as a Marubozu. And in the second case, open is equals to low and close is different from high. And by using the formula, we will calculate the percentage. If that percentage variation is up to 0.02 percentage, then we will place the trade and we will consider this candle as a Marubozu and that trade is valid. And in the third case, open is equals to low, but the difference between close and high is large. And here, if the percentage is greater than 0.2 percentage, that's why we do not consider it as a Marubozu and we do not place any trade. So that kind of candlesticks are available. Next, see green Marubozu candles with abnormal length. So the green candlesticks with abnormal lengths are avoidable, means we do not place any trade. Why? Because if the green Marubozu candle is too short, then it indicates that there is no much buyer's value. So that's why we will avoid the trade, because the upside movement may be happened or may not be happened. When the green Marubozu candle is having too long, means too length, then we don't place any trade. Why? Because placing stop loss will become a problem, and this we will discuss in the end of this video. Green Marubozu indications. So what a green Marubozu candle indicates to us. See, a green Marubozu indicate a stock has traded strongly in up direction throughout the session. Means green Marubozu candle indicates that the total traders are bullish in nature. The green Marubozu candle indicates that buyers controlled the price of the stock from the opening bell to close of the day. It's completely the traders are on buy mode. So simply we can conclude that the green Marubozu is considered as very bullish in nature. Next, green Marubozu area of value. So area of value is the place where we can get profit by placing a trade. So area of value is a location where trading a particular candlestick will give you profit. So the area of value for Marubozu. A green Marubozu is valuable anywhere in the chart, irrespective of the prior trend. Means some candles are having area of value in uptrend. Means by placing a trade in the uptrend, you will get profit. And some candles give you profit in downtrend. Some candles will give you sideways trend. But green Marubozu candle itself is a candle which will give you profitable trade in any trend, uptrend or downtrend or sideways trend, whatever the trend is, irrespective of the prior trend, you can place a trade. Let's see a graph, and here the last candle in formed is Marubozu, and if you observe the trend, it is having series of higher highs and higher lows. So you can say that the given trend is uptrend, and in this uptrend Marubozu is formed at the top of an uptrend. So at the top you will be having Marubozu. Even at the top of an uptrend also, Marubozu can be traded. Marubozu will give you profitable trade. So top of an uptrend is also area of value for Marubozu. And here in another graph, Marubozu is formed at the bottom. So if you observe the trend, it is having series of lower highs and lower lows. So we can say that that given trend is downtrend, and the location of a Marubozu is bottom of and downtrend. And even at the bottom of and downtrend also, Marubozu can be, you can place a trade depending on Marubozu formation. So bottom of and downtrend is also area of value for green Marubozu. And this is by observing the graph, you can say that market is moving sideways. So this is sideways trend. And if a Marubozu formed in sideways also, you can place a trade. Means sideways trend is also, sideways location is also area of value for Marubozu. So simply wherever, whatever the trend, whether it is uptrend, downtrend, sideways trend, wherever the location of the Marubozu, you can place a trade by predicting the direction. So now we are going to learn about green Marubozu potential direction. So potential direction means after placing the trade, which direction the market going to move. So irrespective of the prior trend, green Marubozu formation indicates that the potential direction will be along upside. So in an uptrend, after the Marubozu formation, you can expect that the potential direction will be along the upside. And in a downtrend, after the formation of Marubozu, you can expect the potential direction along upside. And even in sideways trend, after the formation of Marubozu, you can expect the potential direction along upside. So from all these, irrespective of prior trend, whether it is uptrend, downtrend, sideways trend, a green Marubozu formation always indicates the potential direction will be. By looking at the Marubozu, we can predict that the momentum will be along upside. Next, green Marubozu entry. So where we can enter the market. Buy around the closing price of a bullish Marubozu. So we will buy the stock around the closing price of a bullish Marubozu. So let's take a graph. And top of a Marubozu always indicates the closing price. So we will place the trade at closing price of a green Marubozu. Now this can be of two types. Means you can place the trade in two different ways. One is you can place the trade around the closing price on the same day as the pattern forms, or you can place the trade around the same closing price on the next day after doubly confirming the trend. So how we will place on the same day? See, when green Marubozu forms, we will place the trade few minutes before the closing price of the day session. So why few minutes before means, if you place 1 hour before, in that 1 hour the market may fall, which is giving you which gives you the difference between high price and close price greater than 0.2. That invalidates the Marubozu. So that's why we will place just few minutes before the closing price, then the Marubozu will remains Marubozu. And the next day, so next day also we will try to place the order around the closing price of the candle, previous day Marubozu candle. But what is the advantage of placing the next day is, next day you can observe that the next day candle is forming above the closing price or below the closing price. Means there are two chances. If the candle may form above the closing price, or the next day candle may form below the closing price, If it is formed above the closing price, so here we can doubly confirm that the trend is going to move in upside direction. So we will place a trade. Or in the next day, if the candlestick open below the closing price, so we do not place any trade. Green Marubozu stop loss. So where we can set a stop loss. Place the stop loss around green Marubozu candles low. So this is a Marubozu candle and bottom of a Marubozu considered as low, and here we will place the stop loss, and we know that we are placing top of the candle means closing price. We are buying at the closing price, we are keeping stop loss at the low, and that's why we do not trade. So here our loss will be the difference between buy and stop loss. That's why we do not place larger means lengthy Marubozu candles. We do not trade the lengthy Marubozu candles. Why? Because the difference between buy and stop loss will be large, that leads to a big losses. So that's why we avoid trading lengthier Marubozu candles.